When we look at what happened so far, I would say that we booked overall on the P&C side between the Q1 and Q2 800 million of underwriting impact due to COVID. And on that number, I would say the uncertainty, there is some uncertainty clearly. You can see also that there are cases brought to courts in the UK or potentially in Australia. But again, I will say on that one, the uncertainty might be limited. It's more really about what might happen. You know, there are speculation about a second wave. If you have a second wave in the second half of the year, this is going to create most likely additional disruption in the capital markets. So that's more about what might happen as opposed to what has happened so far.
Just on the solvency ratio, you did signal that 180% level may be challenged here. You've reported 187%. How do you think that is going to change through the next 2 quarters?
So first of all, we feel very comfortable with the level of 187% solvency ratio, so that's a good level. We also know that there is volatility associated to that ratio. You can see our sensitivities. So clearly, if capital markets are going to be turbulent, we might test the 180%, but that's part of, if you want, of the nature also of the solvency to capitalization. So from that point of view, I wouldn't get overly excited if in a sort of capital market turbulence, we might drop below the 180%. That's something that might happen, but there is always a recovery after that. On our side, clearly, we are focusing on doing what we can in order to stabilize the solvency ratio as much as possible. So we are de-risking. On the equity side, we have put some credit default swap in place. We are always committed to keep the duration stable. And then I think what is important is to always work on the fundamentals of the business, because eventually the fundamentals of the business are always going to prevail in the mid and long term.
Obviously early, but we're already looking at Storm Isaias marching up the East Coast in the United States. It's had some impact on power supply there. What do you see in terms of your potential liability to hurricane season in the US?
You know, we have clearly observed the situation in the sense of there is this understanding that this year might be a year where we're going to see substantial hurricanes in the Caribbean and in the US. So from that point of view, we have bought some extra aggregate coverage in order to protect for an accumulation of frequency of hurricanes. So from that point of view, considering our business profile that is kind of limited, if you want, in the United States, and considering that we have these boats, these aggregate loss, I would say that our exposure would be such that we wouldn't have a substantial overrun compared to our normal budget.